Bismillahirrahmanirrahim, boys. It's your lesson number 12, and in this lesson we will discuss about the source documents. Basically, these are the commercial documents which are used in your business. Source document, and these are also known as the commercial documents. Okay, and next we will see purchase order, one of the commercial document. Then delivery note, goods received note, and invoice or bill and its components, and terms of trade which are written on your invoice, and which are also part of your purchase order as well. And next is your credit note are there, debit note are there. These are also very important documents. And then the statement of account, we will discuss about statement of account. And next is your payment, when payment is made by the purchaser, by the buyer to the seller, and what documents are there. And at the end we will see the document which are used in credit transaction, and more or less all of these are also used in the credit transaction. And we will see which documents are prepared by the buyer and which are by the seller. Students, we will discuss that the documents which are exchanged between buyer and seller. Okay, we will be focusing on these two parties. Okay, and we will become a seller and see that what document we have to prepare and what documents are prepared by buyer. So what are the source documents? The documents which provides documentary evidence to the bookkeeper that transaction has occurred. Without source document, a bookkeeper cannot record your business transaction. So he has some source documents. These are the commercial documents which are necessary to record any business transaction. It reflects of monetary value of the transaction, that is sale invoice shows that we have made sales and tells about the amount of the sales made. First thing is your commercial document is your purchase order. As you can see from shaking hand, that buyer is preparing and sending it to the seller. So boys, here are the specimen of purchase order is made by the buyer. His company name is written over there on the top left, and on the right corner there are the references of the document, and the date is there. And on the left side, after your address, the purchaser address, the vendor address is there. Mean if you are a seller, your name and company name and address and contact number will be written over here. And in the table shown below are basically the detail of the order is there. So a purchase order is a commercial document and first official offer issued by the buyer to the seller, indicating types, quantities, and agreed price for the product or service, and any specific instruction about the packing or other things also can be written over there. It is used to control the purchasing of product and services from the external supplier whenever. So here you can magnifying the image of this, you can see the detail are there, and these detail are normally these detail can be customized according to the requirement of the business. So next is your delivery note. Delivery note is basically a document accompanying a shipment of goods that lists the description and the quantity of the goods delivered. A copy of the delivery note signed by the buyer or consignee is returned to the seller or consignor as a proof of delivery. When you are selling goods to Mr. A, you are a seller, you will prepare this delivery note that I am sending to Mr. A such and such goods, and with you that you have delivered that goods at at the buyer's premises, and you can see the detail are there. Good receive note. A good receive note is a receipt or a note that a customer uses to validate the receipt of ordered products. Once the supplier send an invoice, the account department will use, it is very important, was whenever all the invoice is sent by the seller to the buyer, and before making payment they will get a copy of good received note, which was basically prepared by the storekeeper, and send it to the account department. They will match the quantity on the purchase order and invoice, and third document is your good received note. Then they make the payment accordingly. Sale invoice. An invoice is a commercial document used by business to indicate a transaction and request payment for the product or service. Here in this case, you are seller, you are preparing this and sending it to your buyer, and here is a specimen of sale invoice. Date is there and purchase order reference is there, and the name of your customer is there. All the details and all the description are also written over here. It is issued by seller and sent to buyer. It gives detail of the goods supplied, the amount to be paid by the buyer. You can have a look of the details over there. So in your sale invoice, there are certain terms. Net 30. Net 30, if net 30 days if written, it means invoice must be paid within 30 days. And the second point, if the term are 2/10, it is written as 210 net 30, 2/10 net 30. It means that 2% cash discount will be given if the payment is made within 10 days, and maximum time limit for the payment is 30 days. Within 30 days they have to pay, otherwise the seller will charge interest on overdue amount. So these are the term of trade, and a line can be added and maybe added. E and OE means errors and omission are expected, and because whenever you are writing something, maybe there is a mistake in writing the rate of the goods or the quantity of the goods. So the initiator, the person who is making this commercial document, if he has written E and OE, then there is in this case he reserved the right to rectify the error if there is any in the document. Discount allowed to the buyer at the time of purchase as a result of bargaining. So at the time of bargaining, whenever you go somewhere to shop something, and there the price is displayed, that is known as list price is displayed, and when you bargain with your seller, you ask him to reduce the price. If it was $250 written over there, and by bargaining $10 discount, so the net price which will be written on the invoice is $240. So in this case, you got trade discount, that is $10, and $10 is being deducted from the list price to arrive at the invoice price, but the transaction will be recorded as $240, not $250. A seller reduces the list price of the goods by certain agreed discount rate, that is trade discount, say 5% or so. Then the invoice price is calculated after deducting that discount from your list price. For instance, how your invoice price be calculated. List price 250 I told you. Then if trade discount is $10, so your invoice price will be 240. And in accounting there is no entry for the trade discount is made, but we have to make the calculation of the amount of the trade discount to arrive at the invoice price. Sales price are reduced in the sales and purchase are recorded in the books at invoice price, not the list price, if trade discount is present in the transaction. So cash discount, another discount that at the time of payment within the discounted period time, say within 10 days as per our term of trade, the discount period was 10 days, and if you made the payment within 10 days to your supplier, to your vendor, then he will give you 2% discount according to our terms of trade. A discount is allowed by the seller to the buyer is known as the cash discount. Cash discount is recorded in the books of account, books of both buyer and the seller. It is income for the buyer, and at the same time it is an expense for the seller. So discount is allowed. It is cash discount. It is discount allowed for the seller and discount received for the buyer. So credit note, it is a very important document to understand. If the buyer return goods, if the buyer return goods for some reason or required some reduction in the amount owed, the seller prepared that. So point should be noted that the seller will prepare credit note to reduce, to record the reduction or sales return and send it to the buyer. So seller will prepare that credit note and send it to buyer. Basically, it is an information which is passed through this document from the seller to buyer that his account is being credited in the books of seller. Debit note, if the buyer returns goods for some reasons or required some reduction in the amount owed, then he prepare a debit note to record the reduction or purchase return and send it to the seller. Here you can see on the bottom above the date there E and OE is written over there. So it is a debit note which will be prepared by the buyer and send it to the seller, and which shows that now the buyer will not going to give $520 to seller. So that's the second last thing which we are going to discuss here, that is statement of account. It is a summary basically of the transaction that have taken place since the previous statement and shows currently owed. Because on a regular basis seller which shows the summaries of all the transactions. Sellers send the statement to the buyer at regular intervals. The detail on the statement are definitely the name and address of the debtor or buyer, name and address of the creditor or seller, date of the statement for which period it relates to, details of the transactions, that is invoices and debit note, a credit note and a payment and current balance. It looks like that. So that is I must say that this is a summary of a particular person ledger in the books of seller. Okay, and here is the detail of this. You can see the company name, your name is written over there, and the debtor's name is also written over there along with the contact, and each and every detail is being written by you to the that is basically between you and your customer. All the details, he bought something from you have sold something, and debit note, you have sent credit note, and the payments and the discounts and everything is written over there. So in this detail we can see that in the beginning you you have to receive $60 from him, and by the end of that is on at the end of the statement we can see that 190 are the balance payment. At the end, when a statement of account is exchanged, at the end buyer has to pay a certain amount to him. He can pay through check, that he prepared a check, and as you can see that there are on the left corner of the check there are account pays, means that is cross check, and buyer will send you this check and you can deposit in your account. That is your name will be written on pay. That is John J. Johnson, and the date of the check is over there, and the amount is written over there. That is 15,000, and the signature of the account holder is there. That is your debtor, and at the against this you have to give him a receipt. Okay, you have to give him the acknowledgement we have received this check from you. And if he made check payment, cash payment, you will give him a cash receipt. So cash, they will give you cash and you will give them their receipt, that is check receipt. And in the same way, when you receive payment as a check, and you have to give him receipt as well. Here it is. So that is the thing which is basically summary that documents use in the business credit transaction. So credit transaction means the buyer or seller with payment to be made at a later date. The normal stages and some documents are used over here. Number one, buyer prepares. First of all, the purchase order shows the quantity, price at which the goods will be bought. Good receipt note on the receipt of goods, storekeeper will prepare it, and debit note if need arises. If overcharge or in case of purchase return, the buyer will prepare. The seller will prepare what? The delivery note along with the goods sent to buyer. Invoice when the demand of the payment is made, and credit note if need arises. When sales returns is made by the buyer, or any charge overcharge by the seller. So second last is your statement of account, shows all the details of the particular buyer or seller for a particular period. Then buyer sends payment by cash or check. Okay, and it may be he may transfer bank credit. Okay, transfer directly into your bank statement, and it will be reflected in your bank statement. So boys, here is your assignment, and you have to answer the source document or commercial document in each transaction which will be made by Mr. M. Okay, not of the other party, but the M, which transaction, which source document will be prepared by him. Okay, and inshallah see you in the next lesson, that is books of prime entry. Till then, Allah Hafiz.